Hi everybody. In this video, we will look at 3 ways to get funding to buy a business on Flippa. These are loan funding, grant funding, and equity funding. If you have found a business you want to buy, but you don't have enough money, these options can help you move forward. Let's start with loan funding. A loan is when you borrow money from a bank, credit union, or online lender and agree to pay it back over time with interest. For buying a business on Flippa, you can use a personal loan, a business loan, or even an SBA loan in the United States. A personal loan is usually based on your credit score and income. You don't always need to explain what the money is for. These loans are easier to get quickly, but they may have higher interest rates. Business loans, on the other hand, are designed for business purposes and may require more paperwork. You might need to show a business plan, expected revenue, and how the business will be managed. SBA loans are backed by the US government and offer lower interest rates and longer repayment terms. However, they take more time to process and require good financial history. To apply for any loan, you should first gather your documents, including your credit score, tax returns, and a short business plan that explains the Flippa business you want to buy. If the business on Flippa already makes money and has clear records, that can help your application. Some lenders who specialize in online business loans include Bupos, Guidant Financial, and OnDeck. Always compare terms and check reviews before you choose a lender. Now, let's look at grant funding. Grants are different from loans because you don't have to pay the money back. However, grants are harder to get and are often only available to specific groups of people or for certain types of businesses. For example, there are grants for women-owned businesses, veterans, minority entrepreneurs, or startups focused on education or technology. Grants may come from government agencies, non-profit organizations, or even private companies. To apply for a grant, you usually need to fill out an application and explain why you deserve the funding. You may be asked to share your background, your plan for the business, and how the grant money will help you grow it. Some websites where you can search for grants include grants.gov, the Small Business Administration, and local economic development offices. Getting a grant takes time and patience. There is no guarantee of success. But if you qualify and your plan is strong, it can be a great way to fund your Flippa purchase without taking on debt. Lastly, let's talk about equity funding. Equity funding means you raise money by offering someone a share of your business. Instead of paying them back with interest like a loan, you give them part of the profits or ownership in return for their investment. To do this, you need to find an investor who believes in your plan and is willing to take a risk. This could be a private investor, a family member, or someone you meet through a startup event or business network. When you pitch your idea, keep it short and clear. Show the investor the Flippa listing, the business history, and how you plan to grow it. Be ready to answer questions and explain how they will benefit from working with you. Equity funding can be a powerful way to buy a larger business without taking on personal debt. Just remember, you're giving up part of your future profits, so choose your partners carefully. To recap, loan funding gives you money you pay back over time. Grant funding gives you money you don't have to repay, but it's more limited. Equity funding gives you money in exchange for part of your business. Each option has pros and cons, so choose the one that fits your goals and your situation best. I have mentioned a link in the description to create an account on Flippa for free.